Is crypto in recovery right now? Well, today we'll break it down for you, give you a full understanding of where the market is going. My name is Paul Barron. Welcome back into Tech Path. I want to thank our sponsor today, and that is Coinbase. This is a great place to get started in your crypto journey. And it's one of those things that makes it very easy to do that. And if you're brand new, and I know there's a lot of audience that is joining our show in the last 6 months, once we hit 1 million, there's a lot of new people out there watching us. Make sure and check out Coinbase. Get your first account set up where you can go out and buy your first crypto. Then you can kind of explore all the other aspects of crypto. But get started. Use our link down below to give you $200 in crypto to get moving. All right, a couple of things I want to hit on here today. Of course, this week is a data-packed week. Today was PPI. Tomorrow is CPI. Later in the week, we're going to have retail sales. Plus, we have bank earnings, all kinds of stuff that are hitting the market. And of course, Bitcoin did make a recovery yesterday, and Kobe kind of hits it right here. December PPI inflation rises 3.3, below expectations of 3.5. That's a big win for inflation. Core PPI rising to 3.5, where expectations were around 3.8. That's another factor. Smaller increase than expected, but PPI inflation now at its highest since February 2023. That's the only downside to this. Now, remember that CPI is the real indicator tomorrow. That'll be releasing. We'll do a video on that to give you guys some insight to it. What I would just be cautious of is understand if inflation comes in hotter, and I'll show you a chart here in a minute, this could have a little bit of an impact right before Trump's inauguration. And then after that, I think we're going to be in a position where we'll see a lot of opportunity because there's going to be a huge narrative starting to paint out. Another thing I want to hit on right here is the CPI report comes in tomorrow at 8:30. So it'll be hitting the wires first thing in the morning. I imagine, watch for some late trading today. If you see some big, interesting trades this afternoon, the data has leaked. And that's something that we've complained about for quite some time. But economists right now are expecting a 0.3 monthly CPI increase and a 2.9 annual inflation. Here's what could happen. If that goes to a 0.4, it will stick us over the 3% range, and that would be a very significant problem for just inflation as a whole. But inflation cools between 2.8, Fed pauses rate hikes, S&P goes, plus a 1.5 to 2. Bearish if inflation above forecast, that's the 3% range that I'm really talking about. That's where the Fed will possibly hint more hikes. And I think, remember, we have the FOMC later this month. So look for that. And I just want to go to Trueflation real quick just to show you. This is the 6-month chart, what we're looking at right here. If you go back here in September, mid-September, we were setting at around 1.7. Today, we are at 3.303. That is almost double what we've been looking at in terms of just inflation in general. Now, when you spread it out and you look at the 1 year, you can see that dip. But we've almost completely revamped all the way back into April of 24 when we really had hit the peak. And then you look at the performance of what we've seen over quite some time. And I think the scenario right now is very significant to where the future of CPI is going to be going, because this will affect the Fed in terms of rate cuts, either slow them down or possibly even get into a rate raise position. With all that being said, BlackRock is now advertising its Bitcoin ETF on its homepage, and maybe they know something, because if you anticipate a lot of this, what you would look at is if rates go up, we're probably going to see some weakness in the dollar. The alternative assets could play into this, and of course BlackRock right there. I want to go to a clip real quick. This is one of their analysts kind of breaking this down. Take a look.
I mean, the first thing you say, that employment number on Friday was pretty powerful, and it led to this belief. And when you look at the confluence of data that's come out, you get an economy that's operating at a pretty strong level. You're still operating year-on-year core CPI at 3+%, and core PCE we think is going to run mid to high 2s for most of the year. Fed's still in a tough spot. Unless employment starts to soften, you've got rates that aren't going to come down from here of any significant magnitude. So you think about what longer bonds are. And if you said, I've got 2 assets I can hold that have long duration, I can own equities or I can own bonds. Bonds, even at 5%, I'm thinking like, what is my upside downside? So you think about mega cap, they're throwing a 30% return on equity. If I'm going to hold those for 2 years, 3 years, 5 years, and they buy back a huge amount of their stock, so they shrink the denominator, their book equity, so I can own that and compound 30% plus, even with multiples that are not cheap, or I can own long treasuries I still think if you look at tech and the return on equity, the stock buyback, and the amount of cash that's out there, pretty hard to see the equity market not finding its footing and having a decent year, not like last year.
All right, so as you can see, it's still very bullish going into the equity market. That, of course, will play positive for crypto in general. And I also think that crypto plays even on the negative side, because an escape from cash into something that is an asset, whether it's a risk asset or we get into something like equities going forward, I think this is going to play out very interesting as we see inflation hold the line, and I believe that it will. So that's a big factor here. Trump and, of course, Bitcoin and crypto will skyrocket like never before. Many people were kind of expecting this 6 days till the administration takes office, and I would imagine we are going to see an immediate impact because of the amount of executive orders and also shifts to regulatory environment for crypto in general. So all that very positive. The real question is whether or not this is priced in. And I think, that's the thing you have to ask yourself. Many people would look at this and say, hey, Paul, it's a little bit priced in here. But there's a lot of people that still believe that these pro-policies are still at the very beginning of where we're going to see the cycle go. So a couple of points in this article. You could have bought Bitcoin at around 35. That was before the ETF approval. That goes all the way back to the end of 23. And people would say, well, it's priced in, but it's almost 3 times that price right now. So that's the same logic that they're kind of looking at because of the good news narrative that is going to paint out in this administration over the next 12 months. Let's go to another breakdown, because when you look at Bitcoin, you have to look at how it affects the rest of the crypto markets, including altcoins, and also just the innovation that's happening around blockchain. But here's a clip that kind of sets Bitcoin in a different tone. Take a look.
What happened last week, though, was its first really big daily outflow. 337 million came out. I think all of the Bitcoin ETFs in total are probably negative 2 or 3 billion since middle of December. And now these are financial assets. So I don't know that they'll be much less correlated than they used to be relative to the stock market. I think on risk-off days, they'll be treated like risk assets, which is what they are. So it's great. It's democratized. Everybody could buy it. It's easy. But remember, what that means is the money comes out easily also. And that is a little bit of a change from where we were prior to these ETFs becoming as large as they have.
Would those outflows have been on long-term taxable gains? It was over a year. Would that have anything to potentially do with the outflows?
I doubt it. I doubt most of the money that came out of the stock necessarily went in precisely 1 year to the day, or 1 year and 1 day from the launch, but probably some. Okay. Look, we don't know how these things are going to trade relative to the market. All we can say now is they are now part of the mainstream market. They're in people's brokerage accounts, and that's got really great attributes to it, and it also has potentially negative attributes to it.
This is interesting to hear, mainstream Wall Street talk about we don't really understand how this is going to trade. And when you look at Main Street, Wall Street, and how they've cycled this, because remember, Fidelity is holding Bitcoin and ETH right now. You can go into your Fidelity account, transfer right out of money market directly into crypto and hold it there, make a trade on it. Same thing, and that's a direct access to the asset. Now, granted, you can't move it in and out, but it is direct access. It's not an ETF. So I think that's the factor that's playing into this, because this is really the first true cycle that we've seen access to Bitcoin and ETH the way it is happening now from Wall Street. The other thing that plays into this is the banks. And here was a statement by Eleanor. She hits on one statement by President-elect Trump, and he's basically saying, hey, I'm going to repeal the crypto accounting policy that requires banks holding digital assets to count them as liabilities. We've already seen the FASB change already, and that's how businesses hold digital assets no longer as a liability. If this plays out with banks, and they do pull back, because this is essentially SAB 121, if this plays out, imagine this, because you've got bank reports coming in, earnings coming in this week. I anticipate there could be a little pressure on banks. And if there is, they're going to be looking for new products, new services. And if this pulls the trigger from this administration that banks can now get into the game, wow, we could see something move very quickly from some of the major banks out there. So be on the lookout for that. All of that being said, you've got to put a little bit of negative into the soup, and that, of course, comes from Senator Warren. She sends a 31-page letter over to the new Treasury Secretary, nominee Scott Bessent. Obviously, he has to get approved, but likelihood is Bessent will be the new Secretary of Treasury. So This would be a big deal. And again, you know, when you look at what Warren is doing, she is just repositioning very hard, saying, hey, we understand you don't have a lot of expertise in government, blah, blah, blah. But he has a lot of expertise in running asset-rich businesses. And I think that's something that the U.S. Treasury can use right now, not a politician going forward. So, all right, so I'm going to go to a few clips here. And this is Gary Gensler. He's making his exit interview, but he's doing it as a media tour. And he has a lot of interesting points to make. And I'll kind of give you guys some assessment on these. But let's go to this first clip.
When you look back at the work that you did over the last 4 years, and you also look at this election, specifically this election, and you look at the number of folks in the crypto world who ultimately turned out, not just turned out for President-elect Trump, but turned out for President-elect Trump with money, with dollars, the huge amount of money that went into effectively his campaign as, to some degree, a rebuke of what was happening with your efforts to block some of the things that they were doing. I'm so curious how you personally think about that today.
I believe deeply in our great democracy. I think that this election, though, as you point out, there was money raised from the crypto field. I don't think that's what this election was about. This field, the crypto field, a highly speculative field, has not been compliant with various laws, whether it's anti-money laundering laws, sanctions laws, or in our case, securities laws.
All right, so, you know, he is going to respond like that, I think, forever because he's so anti-crypto. But I think the point being is that innovation has played a big role here. You look at Trump's position and the amount. Remember, we were upwards of 50 million voters that have access and or exposure to crypto. So I think the impact was very clear, is it was a crypto election. And if you look at this right here, just in Donald Trump's campaign raised almost 7.5 million in crypto. This is just in the last quarter. Remember, it still takes a lot to get a campaign, donation. So 7.5 million coming from one category like this, that got the attention of course, President Trump. And I think this is only going to play and continue to play out. In fact, if you look at some of the data right here from Brian Armstrong, Stand With Crypto, this is the advocate group, just crossed a major milestone, 2 million advocates. So now they're anticipating that the goal by midterms could be, let me zoom in on that for you guys, up to 4 million. That's doubling. Imagine 4 million advocates, because for every advocate, I think there are 10 people to possibly 20 people that are active within crypto, and then there are the crypto curious. So imagine that would be 40, 60, possibly 80 million voters who are interested in policy surrounding crypto just in the next midterm. That's 2 years away, a bull run, a regulatory framework, all sorts of potential opportunity, most likely a strategic Bitcoin reserve and or others. Think about how much impact this is going to have on American lives. So it's a big deal going forward. I want to go to another clip here. Now this clip will get into Gensler and really where he thinks it's going to be going from here. Take a look.
Thinking of just an overriding question about Bitcoin and what we've seen for the past 4 years under your tenure. And I can only come up really with two scenarios, and neither one of them are great. The first one is that under your leadership, it was, really dragged kicking and screaming into where we are today, and it's a far cry from 4 years ago. You'd have to admit it, with ETFs and adoption by so many different firms. It's almost like there were so many obstacles put up it made it very hard for what could be a transformative new asset or industry. So that's on the one hand that you did. Or on the other hand, it should have been very closely scrutinized. And at $95,000, if this is ephemeral and built on air and a beanie baby, there's going to be an absolute bloodbath. So either you stood in the way of a totally new industry, or you were unable to prevent a huge bubble from forming, which is going to end very badly. And neither one is going to be much of a legacy to look back on.
Joe, I know from our conversations in the past, you view Bitcoin very differently than these 10 or 15,000 other tokens.
But it was hard for Bitcoin under you, though, under your regime. It was very difficult for anything good to happen for Bitcoin.
Joe, within the first few months in the job, we had Bitcoin exchange-traded funds based on futures.
After a lawsuit.
After a lawsuit. Oh, man, Joe was really kind of grilling him there for sure. And he is exactly right. There's really no winning for the Gensler legacy. It's pretty much a done deal, I think, for sure. He goes on to ask him about altcoins, because this is kind of the stickler with Gensler. He hates altcoins. But he goes in and asks him a little bit about altcoins and kind of the future of where blockchain is going. Take a look.
Do you think Bitcoin has inherent value and is a store of value? Or do you feel that when we look back on it 10, 15, 20 years from now, it's going to be something from the 18th century with tulips?
Joe, it's hard to predict. I think I really do like you, because I know that you think I'm going to out you think negatively on many of these altcoins. You, Joe, but
right.
in terms of Bitcoin, we at the SEC have never said it's a security.
Well,
I have not.
What do you think? You taught at MIT. I think you know. I think you got to have some kind of feeling. You've read the books, Bitcoin Standard.
Yeah. These other thousands of projects need to show their use case and show that they actually have fundamentals underlying them, or they won't persist, Joe.
Oh my God, you own Bitcoin.
That's where the public. That's why the public needs disclosure.
That's what it's.
I don't.
You love
I've
it.
never owned.
You love.
I've never.
You love it. You don't like those other coins.
I've never owned any of these, and I've been consistent for 7 or 8 years on this.
Well, now you can, because you won't be at SEC chair anymore.
There you go, man. Joe is he's definitely an interesting cat when it comes to interviewing these people. Hey, listen, the point is that we are in a position right now where I think all things are on the table. And that's where I think the current and incoming government is probably going to reshift a little bit about the whole crypto narrative in general, and especially Bitcoin and obviously blockchain technology as a whole. One last thing to note, guys, this upcoming week, remember that the inauguration's on Monday. That's also Martin Luther King Day. Now, remember, all banks, trading institutions out there, Wall Street, all that's going to be closed on Monday. So while the inauguration is going to be happening, I don't anticipate that we're going to see an immediate next step until Tuesday. That's when we'll probably see real executive orders starting to hit the news wires. And I think at that point, you'll see the markets open back up and you'll see a new potential move on digital assets. So stay tuned right here. If you guys are not in the Diamond Circle, get in right now. Make sure and subscribe to the show. That, of course, helps us out. And if you're not following me out there on X, do that. It's just @Paul Barron. We'll catch you next time right here on TechPath.